Listen up, guys. We have 7 companies to break down in this video, all of which reported earnings. Today, we're going to break down their EPS, their revenue, the guidance, right? We'll break down the charts here as always and what I'm looking to do with these stocks. So if y'all find value, hit that like button. Make sure to subscribe here on YouTube. It's free. And you might as well follow me on X as well. Why not? That's also free at Stocks Talk Stocks. It's linked down below. And you might as well get up to 16 stocks as well for Moomoo, each up to $2,000. Fund your account with at least $100. You get 5 stocks right off the bat, and you get a free share of SoFi stock on top of that. And if you fund your account with at least $1,000, you get 10 more stocks, totaling 16 stocks, guys. Again, use that link down below. And with that being said, cheers. Let's dive into it. So the stock market did pretty well today, guys. We had the Dow Jones go up 0.2% on the day. We had the Nasdaq up around 0.9, almost 1% up. We had the S&P, let's see, up 0.3%, and we had the Russell actually go down a little bit. All right, the Russell went down 0.3%, but overall, we had all the major indexes up a good amount today. Pretty good day, and it looks like SPY and Triple Q, they're both starting to break out. Not fully yet, but they are starting to break above the downwards channel on the 4-hour chart, which is great. You guys can see that on SPY here. My alert's at 440. If that breaks, I think a full-on breakout's coming. And on Triple Q, you guys can see my alert's at, let me see, where's it at? 375, which it's already peaking above this channel, guys. If we break 375 into the 380s, that's where I think a full breakout on Triple Q could be coming. So markets are looking pretty good, right? The VIX has died down. It went down 0.5% today. It's at roughly 14, 15 points. It was just at almost 25 points not too long ago. So we're starting to see a potential breakout. The VIX has died down. Metals are starting to come down a little bit. We have silver down on the day. It went down 2.3%. We had gold down about 0.7%. So let's break down these different companies today, guys. What's going on with the earnings, their charts, all that good stuff. So, yeah, sit back, relax again. Cheers. Take a sip of your water, your coffee, whatever you guys got going on. I have my coffee right here. Cheers. And let's talk about it, guys. So Uber reported earnings in the morning, and we got some crazy stats out of Uber. Their stock went up 3.7% on the day. Pretty nice move. And now this is fully breaking out of the channel here. You guys can see, we're above the highs from the last couple of months. In other words, we're at a multi-month high right now, and it looks like we're getting pretty close to the highs from the beginning of August, being about 52 to about $53 per share, which is a really good sign overall for the bull. So Uber reported in the morning. They ended up doing, let me see here, guys. I was looking at this before. Now I'm missing it here. Where the heck is it? Looks like they did sales of $9.29 billion, which beat the $8.99 billion expected, which is awesome. And it looks like here, not revenue, EPS ended up coming in at 10 cents, which missed the 11 cents expected. And what blew my mind completely, guys, which I'm not sure if the metric is here, but lucky enough, I remember it because I was looking at it earlier today. They had, I think, total completed trips for the quarter of 2.44 billion trips, which that's up not 10, not 15, not 20, but 25% year over year. That is just unbelievable. When I read that, it blew my freaking mind. And monthly active platform consumers were roughly at 142 million for the quarter, up 15% year over year. Their global member base looks like 15 million for the quarter. Actually, am I reading that wrong? Either way, this is interesting because you all know at this point, interest rates are going up, right? They're pretty elevated. It's, difficult to get a car. Well, it's not difficult to get a car, but the monthly payments are a lot higher these days because of the interest rate situation going on. And some people, what I'm getting from this earnings report is some people are probably like, screw it, I'm not even going to buy a car. What's the point? Especially if I live in the major cities, right? Or near a city, I'm just going to Uber. That's kind of what I'm getting from this, right? The fact that the completed trips, 2.44 billion, up 25% year over year, that is just unbelievable. So I'm thinking more and more people are opting to just take an Uber, take a Lyft, especially if they're in the city, than have the hassle of having elevated car payment, insurance. You have to pay for parking, especially if you live in the city. So Uber is probably benefiting from, believe it or not, the high interest rates and the lack of, not the lack of demand for cars, but the lack of people running to buy a car due to the interest rates, right? So this is putting Uber in a very interesting position, and I'm sure that's a huge reason as to why the stock's moving, and maybe it'll continue to move over the next couple of quarters. I don't know, but overall, Uber's numbers pretty good, impressive in my opinion, and their stock is up a good chunk, around 4% on the day. Awesome. And the next one that I want to go over here, guys, is Celsius, ticker symbol CELH, which you guys probably know what this company is, or maybe not. I'll tell you right now. And no, it's not the crypto company, guys. No. This is an energy drink company that is pretty much everywhere. Do you guys remember a couple years ago, Bang Energy was advertised all over TikTok? I mean, geez, they must have blew tens of millions, probably hundreds of millions of dollars on marketing. All the big TikTok influencers were pushing Bang. Well, it seems like Bang's out the window. It's been out the window, and now Celsius has taken its place, right? A lot of these influencers push Celsius now, and their stock has been doing very freaking well, guys. Very well. It was at $80 a couple of months ago, and it hit 206 back in September, which is nuts. It pulled back, double bottomed at about 150. Now we're on the up and up again. So they reported earnings, I believe, this morning, and their stock ended up not doing so well. We hit $200 in the pre-market. Then we went down to 167. All right, that was a drop of 15%. Pretty big drop there from pre-market to the low of the day. Then we ended up rallying into close, which is nice, but still went down about 1.5% on the day. So Celsius ended up doing 89 cents in EPS, which beat the 46 cents expected, and sales also beat 384 million roughly versus the 348 million expected. So beat EPS, beat on revenue, and the stock is pretty wonky right now, which, it tried breaking out in the pre-market. We sold off massively intraday, like I showed you all, and now we're kind of sandwiched between these moving averages on the 4-hour chart. So I'm going to wait and give it a couple of days to kind of digest the earnings and see what direction it wants to pick. And if we do start, cracking above 180, 185 again, this could be going to 200, maybe even higher fairly quickly. So Celsius, CELH, keep your eyes on it. Up-and-coming company, and the stock's been doing very well. And that's not guaranteed for it to continue, obviously. Who knows what's going to happen with the stock moving forward, but it's been doing well. There's no denying that. And we also had Datadog report, and their stock went up 30% on the day, guys. You heard that right. 28% to be exact. I'm rounding up to 30%. Either way, very good day for Datadog, completely breaking out. It's at a multi-week high. We're now above the moving averages on the 4-hour chart, which is great. So they ended up doing, 45 cents in EPS, which beat the 34 cents expected, and revenue also beat 547 million versus 524 million expected. So they beat EPS, beat revenue, and they see Q4 2023 EPS of 42 to 44 cents, which is a lot higher than the 35 cents expected. And they see revenue, which is also higher, of 564 to 568 million versus 543 million expected. So whenever you see a company beat EPS, beat revenue, guide up for EPS and revenue, that's kind of a formula for the stock to rip. Maybe not, 30% every time, which it's nuts in Datadog's case here. But usually, man, when you see a stock, report those kind of numbers and they guide it up, it looks like for full year revenue as well. Yeah, they see full year revenue of 2.1 billion versus the 2.06 billion expected. Yeah, that's kind of a formula for the stock to rip, and there's no doubt about it. It is a bit overbought. I'm not denying that, but if this cools off a bit within the overall breakout, there could be an opportunity here in Datadog. And the next one here, which I haven't looked at yet, is Upstart, which the ticker is UPST. Their stock seems to be collapsing here after the bell. Holy smokes. And it's down about 20%. Holy crap, guys, which I think last time they reported it collapsed, right? Yeah, look at this, man. Holy crap. It ran all the way to $72 back in August. They reported numbers, and the stock pretty much cut in half and some over the next couple of days. It went down from $72 to $30, which was a drop. of almost 60%. So Upstart ended up reporting after the bell here, they did adjusted EPS of negative 5 cents, which missed the negative 2 cents expected, and sales also missed. The double knife to the heart, guys. 134 million versus 140 million expected. So double miss for Upstart. Not loving that at all, and the stock clearly is not loving it. It's about to fall under $24 by the looks of it, which is a multi-month support. So we're going to have to watch and see what Upstart does here. I'm not liking it, guys. It tried breaking out, but clearly got rejected. And here we are getting slaughtered, guys. So the next one I want to go over is Devon Energy, ticker symbol DVN. I believe they reported after the bell, right? So let's see what's going on here. Their stock went down 3% on the day, and it's actually down even more after the bell. Oof, guys. So 3% on the day down, and now after the bell it's down an additional almost 3%. So this thing is taking a beating right now. Let me see what's going on with these numbers. Looks like they did EPS of $1.65 versus $1.57 expected, and revenue came in. Where the heck's their revenue at, guys? Oof, I'm not even seeing the revenue. That's not a good sign. Maybe they forgot to put it on here, but EPS beat. Revenue not seeing it, but production average 665,000 oil equivalent barrels per day. Looks like capital exceeded to range from $870 million to $930 million. Operating cash flow totaled $1.7 billion. All right. And production expected to range from 640,000 to 660,000 barrels. Looks like per day here. I'm not sure why the revenue's not there. What the heck is going on here, guys? Maybe now that Schwab or the merger went through, they're screwing over or they're screwing up the live news tab. Either way, guys, I don't know what's going on. But Devon Energy looks like it's on the brinks of collapsing. I'm not gonna lie, this is a descending triangle overall on this 4-hour time frame. You guys can see support at $45, but lower highs being made into that support. So that brings up the question, where could Devon Energy be going if we flush through this support, which kind of looks like we're going to do that. Not guaranteed, obviously, but if we do start seeing that descending triangle play out, we could easily start going down low, mid, they're not low 30s, but mid to high 30s, excuse me. That's the next window that we have right here. So Devon Energy not looking so good. Maybe it's opening up an opportunity for the longer term investor for sure, now that it's down a good chunk from recent highs. But as a trade, if anything, I'd be looking to short this, by the looks of the setup right now. I don't know. That's just me. And the next one here, guys, is Occidental Petroleum. OXY is the ticker. They reported, I believe, after the bell. Let's see here, guys. After the bell, their stock went down 2.5% on the day, but now in the aftermarket hours, it looks like it's up around 1.5%, recovering a good chunk of that loss. So Occidental Petroleum, they did EPS of $1.18, which beat the 84 cents expected, all right, and it looks like revenue is also not showing. What the heck is going on with these companies, guys? I'm not sure why they're not showing the revenue here, but either way, they beat on EPS, and this stock has been very wonky. I mean, look at the chart here, guys. Up and down, up and down. I mean, this thing is all over the place. We have a head and shoulders right here, which I'm not sure if you guys can see it, but let me draw it out so you all can see it now. Let me see what that's looking like. Yeah, we have the left shoulder there, the head, the right shoulder. Not the cleanest looking head and shoulders, but still one nonetheless. And of course, Buffett owns this stock. You guys probably know that. And, if this thing comes down even more, he's probably going to be buying some more Occidental Petroleum. On the 3-year chart, you guys can see now we're down about $17 from the recent highs, or around 21%. So it's officially in a bear market as of today's trading. And oil has not been doing well recently. Probably a good reason as to why these energy companies have been getting destroyed. Their stocks have been, at least over the past couple of weeks. You guys can see oil was at 95 a barrel back in the end of September. Now we're at 77 a barrel, guys. It's down almost 20% from that point. So that goes to show how quick oil can move and these energy stocks can move, which is why I'm not heavy in energy stocks, although I do have my exposure in XLE. I'm not in individual energy stocks right now, but XLE is an ETF that I own, and I'm actually going to be planning on buying more. I'm planning on buying more here. On the weakness, we are down about $10 per share from the highs, or around 11%. So we are in a correction. We are in correction territory on XLE, and I'm going to be looking to pick it up if it comes down to, or pick more up if it comes down lower 80s, maybe high 70s. That's a good spot in my opinion. And the last one, which I've never tried personally their products, but I've heard good things, Dutch Bros, ticker symbol BROS. Looks like they reported and their stock is popping a little bit after the bell. So they closed pretty much at break even at $26.60. And now after the bell, they're up around 3%. Initially, they shot up almost 10%. You heard that right, guys, 10%. So Dutch Bros, of course, is a coffee chain. I'm sure are they expanding to the East Coast yet, man? I'm not sure, but I know they're all over the West Coast, and a lot of people swear up and down they're better than Starbucks. I don't know. I got to see it to believe it personally. But look, Dutch Bros ended up doing adjusted EPS of 14 cents, which beat the 7 cents expected. That's good. And sales also beat $265 million versus $258.6 million expected. So they double beat, which is nice. And let's see, anything on guidance or anything on EPS, rev, nothing more than just the brief, the headline numbers here, guys. But yeah, man, it looks like it's starting to reverse on the 4-hour chart. We do look like, or it looks like we're seeing the start of a golden cross. We are above the moving averages for the first time in a couple of months, and we are starting to get maybe not the cleanest looking one, but an inverse head and shoulders that we can see the left shoulder there. The head's right here. Boom. We have the right shoulder right here. So Bros, Dutch Bros, the ticker is BROS, by the way, hence why I just called it Bros. It looks like it's starting to reverse. Not fully breaking out yet, but showing some headway, which is pretty good overall for the bulls. So what do you guys think? Let me know your thoughts in the comments. Hit that like button, and please do your own research, guys. I'm not a financial advisor. I'm not telling you to buy these stocks or do anything with these stocks. And don't forget to follow me on X at Stocks Talk Stocks, and you might as well get your free stocks from Moomoo. Once you fund your account at least $100, you get 5 stocks right off the bat, and you get a free share of SoFi stock on top of those 5 stocks. And mind you, each of those stocks could be valued up to $2,000. And listen to this, it gets better. Fund your account at least $1,000. On top of those 6 stocks, you get 10 more stocks, totaling 16 stocks, each up to $2,000, guys. So it's a no-brainer. Use that link down below, or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you on the next one.